Hi, I'm Phil Grande at philsgang.com. I have a syndicated talk show across the country, philsgang.com. And if you recall, and I predicted right here on July 13, 2012, that we would have a correction of the stock market of 1,500 points the last quarter of 2012 or the first quarter of 2013. And we did. We had the last quarter, 1,500 points. Now I'm here to predict again that the next stock market crash is going to be bigger than 1929. And let me tell you why. If you recall, on February 20th, the Fed minutes were released, and all the geniuses on Wall Street and at CNBC interpret them as they're going to take the punch bowl away, that they're going to start raising interest rates. They weren't going to continue putting $80 billion in every quarter, 80 billion or 40 billion every day into buying stocks to pump this market up. Within minutes after reading the minutes, this market dropped. And I said to my investors, to Phil Gang's members, I said, don't pay attention. Don't pay attention to that chatter. You got to pay attention to statements. Until Bernanke comes out and makes a statement, forget the chatter. When we dropped that 100 points that day, I told them, do not start going and start shorting yet. We did, of course, short stocks that have relative weakness. But I said, don't start shorting the major indices, because we have yet had a signal on our charts for a major correction like the one I looked for and found in 2012. Now, that minutes of the meeting was such a joke, and somebody panicked because the next day on CNBC, they sent in the St. Louis Fed chairman to tell everybody the following. And I'll play this clip for you.
Fed policy is very easy, and it's going to stay easy for a long time, I think, here. I think that's
going to stay easy for a long time. They wanted to make sure that we knew that it was going to stay easy for a long time, that they're going to continue with the heroin for a very long time. Now, this proved one thing, that this whole stock market is only up because of the funding, because of the pumping of money. What they did, honestly, they came out and told us this market, there's no meat to it. There's nothing under it. There's no earnings under it. There's no economy under it. And certainly there's no economy under it. We know that. I love when they come out on CNBC and these experts go in there and they tell us how housing is now doing better, and that we have constant drop in unemployment, and we have 200,000 jobs a month. We're averaging, and things are getting better. Well, let's talk about these 200,000 jobs a month. What are you, nuts? Give me a break. These 200,000 jobs, these jobs, 3/4 of these jobs stink. 3/4 of these jobs, remember, are $7.69 jobs to $13 an hour jobs. These jobs are horrible. These jobs are waitress jobs. These jobs are service jobs, office clerk, food preparation, waiters, laborers, home care. This is a joke. We got to have $25 and $50 an hour jobs, but we're not getting those jobs. So there is no, the economy is not getting better, not getting better. And then as far as the consistent drop in unemployment rate, give me a break. They're doing that with a trick, the participation rate. Are you nuts? Every time they get rid of people, people drop out looking, they finish, say, hey, I give up looking. The unemployment rate drops. Wait, let me get this straight. Let's see. When a person, 8 million people said, hey, I quit because I can't find a job, so they take them off the unemployment roll, so the rates drop, the unemployment rate drops? What are you, nuts? And then finally, the housing. Housing with the new highs? What new highs? Every time we got these new highs, new pricing going on. No, we don't. That's not what's going on. The housing prices, we have the new high because those numbers are distorted. And when you look at the numbers, the gains are due to what they call a mix shift, meaning that the rate of distressed sales is declining, which in turn means the number of cheaper homes being sold off as a proportion of the total number of sales is falling, giving a boost to the average price. What are you, nuts? That's not how you get higher prices. You get higher prices through demand, but there's no demand. There's no demand here. Here's why. Until we get oil back to $35, this is the trick. Our congressmen, our president, both the Republicans and the Democrats, somehow these people are stupid. They don't connect that for 150 years that our economy has been attached to oil. And when we had the biggest rally in housing from 2001 to 2006, remember what happened. Oil went up at the same time. Starting in 2000, we were $35 a barrel. And we started our housing at the same time. But from 2000 to 2006, oil went from $35 to $75. And guess what happened? The housing market peaked. You can't have $75 oil. Then from 2006 at its peak, it went to 2008. We had the stock market crash. You cannot pay back debt when you have oil above $35. For some reason, our congressman, our president, they're too dumb to understand you got to get oil back to $35. Until we get oil back to $35 a barrel, we cannot have an economy. We cannot have a recovery. And all we're doing to make a recovery is by printing money and borrowing money. And it's a fake economy. That's all it is. So here's my warning. If we don't get oil back to $35 a barrel within the next 2 years, you'll see a stock market be worse than 1929. And yet nobody's connecting how oil has been connected to our economy for 150 years. Nothing is ever going to change that. And at the same time, we are now having oil at $95. What have we been doing since 2006 to 2013? We should have been working on more oil. But what do? They go to green energy. What are you, nuts? Green energy? Green energy doesn't work. We have to subsidize green energy. For heaven's sakes, we can take electricity and natural gas create electricity at 63 cents. But what are we doing with windmills? It's costing us $53 to create the same electric as it does for gas at 63 cents. And we're subsidizing it, and this is a victory. This is a wonderful thing, this green energy. China loses $30 billion a year. $30 billion a year is what they subsidize their five plants that make windmills and batteries and turbines. $30 billion they lose every year. And our president is telling us we should join them and we should stay right there and compete with them. What, compete with them to lose money? And Germany and Japan and Great Britain and Spain all got out of it because it doesn't work. We will have a crash as great or greater than 1929 unless we get oil back to $35 a barrel. So we better wake up, country, and we better focus on oil. Never mind this green, because green is nothing but red. We'll see you on the charts. For my stocks and information on the market and the economy, to get guidance, go to philsking.com.